Welcome everybody back to our channel. We're Twin Shores Capital, and we're going to give you a quick market update on what the crypto markets have been doing lately. Right now we have Alex Krieger, our analyst and trader, and Tim Nihill, our CEO, leader, founder, you name it. Great. So to get started, we're going to just be hitting a lot of different points. The state of the market this week and where we think it's going to be going. If this is what we expected it to happen, and if anything else unexpected we think will happen, we're going to mention that here. Of course, none of this information is financial advice. This is just more for discussion and education. But if you would like to learn more, you can visit our website at Twin Shores Wealth Management. So I highly recommend doing that.
Awesome. Thank you, sir. Why don't we start with this? So welcome everyone, for everyone who's out there watching this. This is our quarterly and month-end update for June of 2022. Obviously, a lot of stuff going on in the world today, a lot of stuff going on in the markets and the economy. And what I kind of figure, why don't we talk about traditional finance, and then we'll merge that conversation into what we're also seeing in the digital asset and cryptocurrency markets. So we're talking traditional finance and bridging that with the new financial world, which is something that we like to do at Twin Shores. Our website, if you want to see, is twinshoreswm.com. We also have our website for twinshorescapital.us, but I would say for anyone out there, if you go to it, understand that that website is currently under development and will be down in the next couple of weeks. So you can find us on our traditional wealth management site for now. How you guys doing today?
Another thing to mention is I would say that all of these links would also be in the description of the video. So if you want to click on the links there, that would be the best way to do it.
Awesome. Yeah, and we'll have some charts embedded into this presentation. So we've had, let's talk about traditional markets. So it's kind of like lions, tigers, and bears, and it's stocks, bonds, and cash, right? For a long time, for the past couple of years, we've really been looking at the thesis around the US dollar is not going to be the global reserve currency of the world, right? Which I think is a very, very high probability. There's a high probability that that is going to happen. So if you're someone out there with a lot of cash in the bank, it's worthless, right? And we all know that the dollar hasn't been backed by anything tangible since 1971 when it was on the gold standard. So it literally is nothing more than a piece of paper with a person's, right, a president's head. But it's important because, that's where the United States has all of its power. It's in the dollar being used to buy oil. So that is under attack by Russia, China. Now the Iranians are in there, Brazil, and even India, I think, is participating in not trading oil now in the US dollar. So that's big for Americans because, your safe money, cash, isn't safe. And especially if the price of gasoline and groceries and everything else are up 20 to 30%, and you're earning nothing on your cash, that means you're losing 20 to 30% on your money. Anyways, so getting into the macro, we have and are currently at, and I'll share some, quick info with everyone here. So the stock market had its worst first half in 52 years. Inflation is at 40-year high. The federal deficit and debt is at $30 trillion. A gallon of gas is $5. The GDP, or gross domestic product, so the productivity, is shrinking. And we're being told from the powers that be that we have a historical strong economy. So for a long time, in the past couple of years, we're looking at the situation as, what happens if the US dollar loses its status as the reserve currency of the world? Well, that's a big deal. And it can still happen, and it is happening. But there's also something new that's starting to develop that I think really impacts everyone's day-to-days and their financial lives, is what happens if the Federal Reserve decides to protect the dollar and bankrupt the rest of the world. That's the dynamic that's in play now. The US economy, and in order to protect the banking system in the United States and the dollar, the Federal Reserve will do whatever it takes, which means they will bankrupt every other economy across the world. You're seeing it in the European Union. Europe is bankrupt, right? Go read what's going on in Europe right now. They're going under because of what the US is doing. Everyone else in the world is going bankrupt, right? So what happens is, and what's starting to align is with these rate increases, with the intent to protect the dollar and the strength of the dollar, all of a sudden you're going to have to sacrifice, if you're an investor in the United States and you're in your 401ks, your IRA accounts, your Roth accounts, and your brokerage accounts, if you're looking at the numbers, there's a potential that the equity markets and even bonds and cash are going to depreciate in value another, I would say, maybe 40 to 60%. Anyone who's listening, if you do a Google search, S&P 500 and central bank assets, there's a chart that shows from 2008, the correlation of the appreciation of the S&P 500, which everyone has in their 401k, Vanguard, Fidelity, et cetera. That's your base index fund. It goes up and it's in direct correlation with the amount of assets that central banks across the world have been buying. And if you look at that starting point number in 2008, it was anywhere, the S&P 500 value was anywhere from $1,200 to $1,400. At today's number, we're over $3,800. So if they unwind those balance sheets and get rid of those assets, that S&P 500 needs to return to its true value. And if it returns to its true value, it will go to maybe under 2,000, 1,500, whatever. But the point is, in order to save the dollar, your equity markets are going to crash and your bonds are going to crash too, because they're directly correlated because they've been buying bonds, right? So now you're in a situation where, and I was talking with a friend of mine last week in Florida who's retired. He's like, I don't know what to do, because he goes, luckily he has his house that has appreciated, but he's like, my Vanguard 401k, he's got a pension, which helps, but my Vanguard 401k, my brokerage, he goes, there's nowhere to hide, right? And like, that's why we're not giving investment advice, but if you're listening, you need to be sitting down with someone and talking about, you need to have your assets in places knowing that one or two places that you own and are invested in are probably going to crash, right? And if you look at Jamie Dimon was, maybe we'll embed this link too, you know, he's the head of JP Morgan. And he said, not only 2-3 weeks ago, he said, listen, we have never seen quantitative easing, money printing, which was the central banks buying everything, inflating everything, 2008 to today. We've never seen that in the history of the world. And we've never seen quantitative tightening. We've never seen banks unwind quantitative easing yet. This is the first time in human history this has happened in the financial markets, right? So he said, listen, there's a hurricane coming. There's a hurricane coming. And so, you know, we're just trying to raise awareness for people like, listen, we, you know, come to us, talk with us, but talk with someone, sit down with someone who has a clue about what's going on, and really take a look at what your financial situation today because what we're going through, we've never seen in the history of the financial markets. You know, Great Depression, recession, all these tag words, they don't matter. Like we have wars now in Europe. We're having a massive financial war and we're having a fiat currency war. And we're all sitting in that. And, you know, now's the time where you either make the moves that are going to protect you and your family, or, you know, probably massive chaos of portfolios. So it's been really, really interesting to watch everything that's happening. But I mean, think about it. If they continue to tighten, there's a real good chance that S&P 500 we see on the daily ticker every day goes back and returns to its its true value. I mean, can you imagine what happened and what's going to happen if people open their 401k statements and they see, 40, 50% of their money's gone? And it's not going to, and it's not going to rebound. It's not going to do what it did in March of 2022.
What do you think the timeline for that is going to be?
I don't know. From what we're seeing from a macro point of view, it's so funny because this is so clear as day and it's so macro. Probably 6 to 9 months. It'll carry into next year, maybe even to 2024. But I don't think we don't see prices going down. And yeah, there's not going to be a quick bounce up. This is going to be painful. And it could carry all the way into 2030. So, from our standpoint, now with that said, there are absolutely opportunities to do really, really well in certain spaces, right? Real estate, energy, things like that, gold, commodities I think they're historically at low values. So if you go back to protecting and return to fundamentals, I think you're just going to see tremendous appreciation and opportunity, especially in the commodity space. And don't sleep on oil and natural gas, because they're very, very bullish. So that's kind of what we're seeing on the traditional finance side. And I think it's one of those things where if you prepare now, you're going to be very, very happy with where you'll be in the next 5 to 10 years for sure. But if you continue down this passive investment and parking your money into an index fund and sleeping on it, those are not going to pay off. So
how do you think that ties into the crypto markets and where we see them today?
Yeah, that's interesting, right? So I would say we'll bring Alex Krieger on to get his thoughts on what he's seeing in the markets. But
right, of course,
I consider, and actually this isn't just, and this is a most recent happening, right? This happened within the past 3 weeks, that the U.S. government and regulations are coming out that certain cryptocurrencies are going to be treated, including Bitcoin, are going to be treated as commodities and not securities. That's a big deal. That's a big deal from an investment perspective. It's a big deal from an inflation perspective, I think. And I think it's very, very important from a taxation perspective, right? Taxation on commodities is much different than taxation on investments. On top of that, in part of this thesis that we've been developing and I'm developing with this protection of the US dollar, let's say that you're now in a situation where, okay, so you have Brazil, Russia, India, China, the quote unquote BRICS countries, no longer trade oil in the US dollar, right? Okay, so technically the US doesn't have reserve currency status anymore. But here's the caveat. What if every other country's fiat goes bankrupt? Their currencies, I mean, look what's happening in Turkey, Venezuela, for example, all these countries, their currencies are just collapsing. It's a tremendous opportunity to have massive adoption of the US dollar with those countries. So we're in a situation where hypothetically you could have the United States loses reserve currency status of the world because it's no longer the only one. But at the same time, all the other countries in the world just adopt the dollar and get rid of their fiat currencies. And my take on it is, I think it's a massive expansion opportunity for the United States and the Federal Reserve to expand the usage of the dollar. And I also think they're going to let it and unleash it. And they're not going to print it, but they're going to do it through the digital dollar. And that's where cryptocurrencies will have massive adoption. And then Bitcoin, Ethereum, and some major DeFis, I think are going to do very, very, very well, right? They're talking about it because they know, they're like, I went to Italy back in May. I had to exchange my dollars to euros. I don't know how much money I lost on that transaction. And I had to pay 4.25% transaction fee.
Right.
Like, are you serious?
Outrageous.
I can go send Bitcoin and Ethereum at the snap of a finger, speed of lightning, right? And there was someone I was watching on Bloomberg the other day when you had someone up there was trying to bash crypto, right? Oh, Bitcoin's not this. It's like, listen, again, 70% of the world population is now under the age of 50. And they're hell-bent on changing the system. We're doing it right now, just by what we do on a day-to-day basis. We're changing it. It's old, it's outdated, everyone knows it. So, you know, he talked about, he goes, okay, so if I'm in Japan, right, and I want to do a $100 million transaction, I have to have $100 million worth of yen in Japan, and then I'm doing my transaction in the United States, so that means I need $100 million worth of dollars in the United States to do a currency exchange, and then I have to then swap it to execute the deal, right? And then it takes,
Correct.
At least that much.
right,
Well, and then there's only very few partners or select banks or people that can do that large size of transaction as well.
right. And then you got the banks and the institutions, and don't even get us started on the banks, because the, you know, Credit Suisse just got busted for money laundering. HSBC is getting away with absolute murder with what they've been doing, and no one's holding them accountable, right? So they're laundering the money, and they complain that crypto is for money laundering, which is hilarious. But right, then you have to deal with the fees and the transactions, and then that transaction will take 4 to 7 business days for it to get completed just on the money transfer alone, right? And that's where it's like, hey, here's $100 million worth of Bitcoin, done, and it's done at the speed of lightning, as we've seen on the Lightning Network. So we know it's coming. It's just, you know, pick your spots and just go for the ride. So I know we all have our theories and theses on all this stuff, but it's, you know, I've been in finance for the longest time, and I've never seen stuff like this before. And I mean, I had 2 weeks ago where all the news was so negative. I was like, man, I needed to even take a break and just step out of it, because it's bad. A lot of the stuff that it's rough.
It's crazy. From 2008, from when the first financial crisis happened, to about 2018, there was, I don't know, I think it was like $1 or $2 trillion was printed, but since 18 to 22, we've printed 7 trillion.
Right. And there's $6 trillion sitting on the sidelines waiting to go somewhere.
Correct.
So that's why I said it's like, if you're lining this thing up and looking at it, and you're properly invested, and you're not playing that asset allocation game, and we're going to have a real interesting video with a friend of ours next. We'll film it probably next week and put it out next week, who's going to talk about this whole shift and why passive investments have destroyed the markets. If you're not playing that game and you're into the other game, the real game, which is monopoly, hard assets, 4 hotels or 4 houses in a hotel, you know, generating checks, generating income, then you can invest in other things, and gold, silver, and Bitcoin and DeFi. I mean, 2025, 2030, you're just going to be sitting there and just with a smile. So I would ask you, Alex Krieger, you know, I mean, obviously you're in tune with a lot of this stuff because this is your day to day. You know, what are you hearing on the streets, and what do you want to share with people?
Well, 2 theses. One, bottoms in, depending on the macroeconomics. Last summer, a year from last year, around this time, we hit 17 as our low, 17,000 for Ethereum, and I think it was 28 or 29,000 for BTC. And we sat there pretty much for 1 whole month, 2 months of just playing in this range. And in the middle of July, we finally hit the bottom, and then we ripped all the way to 60 in the next 6 months. So my head's telling me, and the charts are saying this is the bottom, and this is what we're about to rotate and go up. Now, that doesn't mean we can't retest 17, but from 17 to 20,000, it's what, $3,000, $2,500. Is that really worth trying to catch the bottom and missing the upside on the next 6 to 8 months, or even longer. I don't know, but I don't know. My gut's telling me that it's not done based on macroeconomic news of what's going on worldwide and what the Fed's doing.
Yeah. Well,
So I think a question that a lot of people will have is, based on what we were talking about last time, which was we thought the bottom was going to be much lower. What changed since then?
Well, I think it was a lot from last time, was a lot of stuff that happened with small funds and big third-party institutions being over leveraged and bringing the market down this low. Right? We had, I guess, Voyager filed for bankruptcy this morning, Chapter 11,
yep, they did.
which is a huge crypto platform for DeFi and other assets. Celsius, I'm hearing they're fine now and they have all their money, which seems very odd to me.
So
And
I heard the word on that one is Goldman Sachs is involved in buying their assets.
so retail gets screwed then, right? Same thing with Voyager. It's considered their assets, so therefore then the creditors, their assets are considered the creditors, right? So everyone that's invested in there, like say if we had 20 Ethereum in there getting yield from Celsius and they were paying us out, Goldman buys it, we would lose our investment, correct? Since Goldman owns it, buys it.
I don't think so on that one. And this is the point that we should make to our audience too, is like, do your homework on these exchanges, right? Like Coinbase, you know, I was talking with someone that has their investments at Coinbase and I said, listen, do you understand that they changed their agreement with you that if they go under and go bankrupt, then their assets or your assets in your account held with them are considered theirs and they're going to take them over. That's a big deal. I don't know that that's the case with Celsius. I have not seen or heard that, but I think for everyone out there, please do your due diligence and homework on if you're buying digital assets, ask that question. I still think that the major players and the bigger folks like, Gemini, Binance, they're going to be fine and you don't have that problem. But definitely with some of the other exchanges, it's something that people and retail investors should really, really be aware of.
Well, apparently I was talking with a buddy that uses Coinbase yesterday. They're switching, there is no more Coinbase Pro, and they're switching to subscription-based trading. And if you pay for the subscription, you don't have fees.
Interesting. Yeah, that makes sense.
So, yeah, you pay, I don't know what the subscription was, but yeah, there's some new thing coming out.
Yeah.
So
yeah, and I think we're seeing the same thing and our charts are seeing the same thing, right? And even colleagues are, sorry, thought I had my cell phone turned off. I think that other folks that I've been talking with are seeing the same thing. It's like, you could call the bottom for Bitcoin and Ethereum. Maybe it's a little bit lower than where it is today, but I think everyone's preparing for the next wave up. Right, this is a very, very mathematical game, right? This is the pricing, and as we were talking about, and I had a friend in technology say it's, technology. It's you have all these things that are developed in the beginning, then you get consolidation, and then you get the massive takeoff and adoption. And especially with what's happening from a macro point of view. Whether it's here, China, Russia, Europe, whatever. I think people are waking up to the fact that banks are not as safe as they think they are, and how vitally important it is. And they talked about this in Europe. I can't remember who specifically it was. Christine Lagarde, she's the head of the ECB. She came and said, digital assets are bad for people they're actually bad for them, right? Because it's a way out of the system and it's a way for freedom and independence, right? It gives people the freedom and independence and not a lot of people at the top today think that that's a good thing. But at the end of the day, it's about the people and what they want. And innovation never happens at the top. It always happens at the side and bottom. So, Not to say that that's always the case, but it seems to be the case with these changing technologies, right? I mean, Apple was started in the garage for crying out loud.
That's true. Very true.
So on the Coinbase subscription, it's called Coinbase One. They offer zero training fees, dedicated 24/7 support, 1 million account protection, pre-filled form, the 8949 form, and premium staking rewards, which is interesting.
Yeah, very interesting. Well, I think it's one of those things, and this isn't a knock on Coinbase, but we don't use Coinbase. But I would just say for anyone out there, if you're in the digital assets, in the cryptocurrency world, do your homework, because that's especially important right now as we're seeing consolidation. And like we spoke about in our other market update a few weeks ago, I mean, new regulations are coming out, right? They're going to come out with regulations for stablecoin. They're coming out with regulations. They're not shutting it down. They're coming out with regulations for digital assets and crypto in Europe. And I can't speak for China. I don't think anyone can. But if you want a really, really cool documentary on China that shares some of the information on the situation that's going on between the United States and the Chinese markets, we'll embed this link to Alex Kaminer. I got to think of it. It's called The Chinese Shuffle, or the China Hustle.
China Hustle.
Right. So the crux of it is a Chinese company finds an old bankrupt company in the United States. They take it over, buy it out for next to nothing. Let's say the Chinese company has operating margins and revenue of 500,000 a year. They go to report, that they actually make $100 million a year in profits. They get listed on NASDAQ. All the investment firms like Fidelity, Vanguard was number one on the list. They all buy them into their index funds. And then the Chinese company pulls the plug, takes all the money and runs. And you can't do anything about it because you can't go after the companies in China. So it's just the information that's out there on some of these things. It's just amazing. But like we said, we're doing this to help drive education and awareness for people. I welcome any comments, thoughts, feedback. Obviously, contact us through YouTube or one of our websites. We're happy to engage and obviously expand as we are just starting off and continuing to expand our educational program. But man, it's vitally important for people to do their homework now. And if you're not doing your homework, then hire someone who does their homework. Doesn't matter who they are, just make sure they're aware and well-versed in what's going on so they can help navigate, people, family, businesses through our current conditions. So like I said, I mean, this is something we've never seen before. and I mean, it's just, it is what it is. So you got to be thoughtful and, as with everything, you always get through it, but there are some tremendous investment opportunities for sure. And I would agree, Alex Krieger, I think if we're not at the bottom, we're pretty close, and it'll be fun to get the next run up.
Correct. And also remember, Bitcoin was made in 2008 to help it during or for a recession purpose.
Right.
Like in 2008.
Right.
So.
And we always talked about it, right? Like at some point, there needs to be a decorrelating event with Bitcoin and technology and the performance of the NASDAQ, right?
Correct. Same with all crypto in general, not just Bitcoin or Ethereum, just all the crypto. And once Bitcoin and Ethereum do, all the others will break away as well. So it's just a chain reaction and just waiting for it to happen.
Right. It's just part of the process. So anyways, for everyone out there, have a phenomenal day or night, depending on where you are. Like I said, if you have any questions or comments, let us know. But hopefully this is helpful, and look forward to doing another market update in another 2 weeks.